Temasek Holdings, the Singaporean state investor, has announced a significant increase of 7 billion Singapore dollars, $5.2 billion in its net portfolio, raising its value to 389 billion Singapore dollars as of March 31, 2024. This increase comes after the portfolio was valued at 382 billion Singapore dollars the previous year, according to the latest annual review released on Tuesday. The boost was primarily driven by robust investment returns from the United States and India, which successfully offset the underperformance experienced in China. Despite posting a modest annual shareholder return of 1.6%, this figure marks a recovery from the previous year's negative 5.07%, which was the worst performance since 2016. This has led to growing questions about the consistency and resilience of Temasek's long-term investment strategy. Over the past decade, Temasek has maintained a steady total shareholder return of 6%, although the 20-year return has dipped to 7% from 9%. This decline has been attributed to the exclusion of the post-SARS recovery year of 2004 from the calculation. At the press conference for the Temasek Review 2024, Connie Chan, head of financial services at Temasek International, addressed the impact of market volatility on their primarily equity-based investments. She noted, "As our investments are primarily in equities, we're not immune to year-to-year market volatility." Temasek plays a crucial role in funding Singapore's annual budget through the Net Investment Returns Contribution (NIRC) framework. This framework allows the government to spend up to half of the long-term expected returns generated by Temasek, alongside those from the Sovereign Wealth Fund (GIC) and the Monetary Authority of Singapore. In an effort to align more closely with industry peers, Temasek has refined its methodology for calculating its mark-to-market net portfolio value. This new approach, which employs market multiples of comparable public companies and other assessment methods for unlisted assets, now values its mark-to-market portfolio at 420 billion Singapore dollars, up from 411 billion Singapore dollars the previous year. Despite a net divestment of 7 billion Singapore dollars for the year ending March 31, Temasek maintained a cautious but steady investment pace. The state investor invested 26 billion Singapore dollar while divesting 33 billion Singapore dollars. Notably, this included a significant divestment of 10 billion Singapore dollars from the repayment of bonds by Singapore Airlines and the redemption of preferential shares by Pavilion Energy. Temasek's investment strategy has been guided by four structural trends since 2016: digitisation, sustainable living, the future of consumption, and longer lifespans. These trends now constitute 39% of Temasek's portfolio, a substantial increase from 13% in 2016. The company has invested heavily in sectors such as technology, financial services, sustainability, consumer, and healthcare. Geographically, the Americas now represent 22% of Temasek's portfolio, second only to Singapore at 27%. However, investments in China have decreased from 22% to 19% of the portfolio, reflecting ongoing structural challenges despite the Chinese government's pro-growth stance. Temasek is now focusing on businesses serving the domestic market in China, including biotech, import substitution, and the electric vehicle value chain. Connie Chan highlighted the increased investments in India, noting opportunities in consumer healthcare and financial services. This indicates a strategic pivot towards emerging markets with high growth potential. However, Temasek's performance has not escaped criticism. Retired banker Chris Kwan commented on his Facebook page, "I try to be even-handed about this. But no matter how you view it, Temasek's performance is between mediocre and ho-hum, the latter meaning nothing to shout about and for quite some time now. Down 5.07% last year, up 1.5% this year. Over 10 years just 6%, over 20 years 7%. Pedestrian for an all-equity portfolio with a very large, in fact majority, unlisted or private assets and a sprinkling of high-risk high-return VCs. To be real, if these are the returns generated, so be it. Just don't praise Temasek like some godsend to the world of asset management or praise the key people like they are masters of the universe." For context, Norway's Sovereign Wealth Fund, the world's largest, reported a record profit of $213 billion in 2023, driven by strong returns on equity investments, particularly in tech stocks. The fund achieved a 21.3% return on its equity investments, highlighting a stark contrast with Temasek's more modest performance. Temasek's diversified and forward-looking investment approach aims to build a resilient portfolio, yet skepticism remains about its ability to deliver sustainable long-term returns amidst global economic uncertainties. What do you think about Temasek's performance and its future outlook? Please share your thoughts in the comments below. Don't forget to like, share, and subscribe to our channel, 2230, for more detailed news coverage and analysis.